There may be signs of worry that are emerging for the Nifty bulls, especially given the fact that the Nifty has now recovered more than 50% from its this year low itself. And that has been more or less in line with what global markets have done. Remember that in March we did hit 7511 for the Nifty, and currently we are at 11,300 to 11,400 odd levels. So that is the kind of recovery that we have seen. And during this process, the recovery that I'm referring to from March to September, the Nifty has managed to claw back above its key moving averages, which is the 50-day moving average, 100, as well as 200-day moving average, with the 50-day moving average being the short-term average that the market participants watch out for in terms of these support and resistance levels. And there is some bit of significance that market participants do attribute this level to as well. What has currently happened is that the Nifty has been above the 50-day moving average for 75 days in a row now, which is an elongated period of time, and there has been only couple of instances in the last 5 years where the Nifty has been above the 50-day moving average for more number of days than 75. In fact, earlier this year it did manage to scale up to as high as 71 days, but that was followed by a massive correction, which was on account of the COVID-19 scenario that we saw across global equities as well. So let me just highlight what the past instances have been like, how many days the Nifty has been able to spend above the 50-day moving average, and when is it exactly that the market hits a peak in terms of the difference between the Nifty as well as its 50-day moving average as well. 3rd of Jan 2020, we had 71 days when the Nifty was above this level, and it had hit the peak immediately 48 days after at the start of this particular period that I'm referring to. 10th of August 2017, we did manage to see the Nifty above this level for 149 days in a row, but the peak of the difference between the two was reached in as soon as 32 days. And in September 2016, we managed to stay above that level for 140 days, and the peak was reached in about 55 days. So currently we are at about 56 days where the peak was hit, and from there on we could actually see a decline if history is to go by. Just to give you a sense of how the markets have reacted, 1 month after 75 days are crossed. For Jan 2020, of course, we have seen the maximum drawdown as at about 6.5%, but that was a minuscule portion of the larger 40% correction that we saw for this year, or the maximum drawdown that we have seen for this year itself. In August 2017, the maximum drawdown over the next 1 month was 2%, and in 2016 the maximum drawdown over next 1 month was as high as 3.5%. So if history is to go by, and if this number of days is an elongated time period, and in case we revert to mean, we could see about 3 to 6% being shaved off from the Indian equities as well.